Hello, everyone. Hope you're doing fine. So, we're here today for the third session of the Bitcoin Weekly Live Analysis with Eat My Chart. So, today I'm with Pierre. Uh,
Hi guys.
and the idea is going to do exactly the same thing that we did last week. So, if just I'm just going to pause for a second just so you guys can check this legal disclaimer, okay? I think it's important. I'm just going to comment on it this time, but it's important to know that every information that we're giving you in this stream, in this session, is really not a financial advice. So, whenever we're saying we should sell here, you should buy here, it's purely our own technical analysis that we trust and that we know how to handle because we have a proper risk management, and this comes with practice. If you are not experienced with trading, if you're not experienced with putting money on the line for such ventures, I would clearly not recommend that you start trading with your own money. You can use paper money, so that's you have lots of softwares and where you can create this, or you can even just imagine that you're putting a position and just do the calculation on your side. But I really advise you to not use the information that you were going to get from this session to put your money on the line until you know what you're doing. And again, we are not giving any kind of financial advice, and every trade that you will be taking, you are responsible for it. Okay? So yeah, that's just to explain why we have this legal disclaimer. Moving on. That's going to be the agenda of our session. So, first of all, what we're going to be doing, and what we did in the previous sessions as well, is review the past week price action and the different trade setups that we had in mind and see which one happened, which one did not happen yet, and which one are still valid. Okay? And then what we will do, as usual, we'll delete everything and start from scratch. Just so we have like a clear mind on where we are and what's happening, and to make sure that we're not biased with last week's trade setups and bias that we had. Of course, we will go through the S&P futures because, as you know, there is a big correlation between Bitcoin and S&P. So it's always interesting to have those key levels in mind to know where are the support and levels that you want to keep in mind whenever you're entering a trade on the Bitcoin. All this will allow us to formulate a trading plan for the week to come. So again, those will be the next trading setups, and we will have the final session of questions and answers if you have any. Okay. So I suggest that we start right now with the chart. So let me show you what we had in mind last week. So we had, let's zoom in because we're trading very locally. And let me just do something also very, so I'm just going to remove this. Yes. I'm going to pretend that we are last week. So last week we did on Monday. So let's put it until Monday here. Up, give me a second. Yeah. Let's say we start here. Okay. So that was last week's picture. We were here at the lows of this range, right? Last week, 21st of November. Am I saying something stupid? I think I am. Actually, last week, no. This is bad. We're not 20. Sorry, my bad. Let's exit this. We were not the 20. We were more like the 28th. So let's just go back in time to the 28th. Exactly here. Okay? Okay, this is more like it. So that was last week's view. Okay? And we had a few setups in mind. So the usual long setup from here. I don't know why it keeps on disappearing, but it's okay. We had our long setup from here. Okay. This one that we've been expecting for now almost, I think, 2 weeks. So we had the SFP of the previous one, but we covered this in the last stream, and we said that we're still expecting the latest SFP of this naked point of control. And we have this short that we had in mind for multiple reasons, because you have the naked puck that's above here. Let's actually put all the levels that we had. This will allow us to see a bit what happened. Okay, we had the triangle pattern that we saw broke to the downside. We covered this last week. This shorting position also was one of those like very local short that we were expecting, but let's just not put it because it's more like of a scalp trade. Okay, so basically the two setups that we had, the lows here, the highs here, and then everything in between is more of a scalping range, scalping territory. So you need really to do the same analysis, but really on lower time frames, 5 to 15 minutes. Okay, so let's fast forward to what happened, and let's do it that way. So we hit this level, just see the reaction that we had on this level. This was you see this, that is scalping territory right there, and that was a 1.4% move. Okay, this is what I mean by scalping trade. Okay, we had this one in mind, but for me it's not like the trade setup, it's more like a scalp trade where you can take some nice profits and then put your stop loss at entry and have a free trade basically. Okay, which I did take personally. So okay, very interesting. Look at what happened here. We arrived here, and what did we do? We front run this level. Okay, so our idea was to actually enter more or less at this 618 area after seeing a swing failure pattern. So actually what happened, and what's interesting, is that, look, the first thing that happened here was this. Okay, and at this moment in time, you need to take a decision, okay? Because your trade setup is higher. You haven't hit this trade setup. However, you notice that we took important highs. You took this high, you took this high, you took basically some liquidity. So that's a trade that I personally took, okay? I took it because I realized that you had here a liquidity grab that potentially what could happen is that we're going to front run this level that everybody is seeing and drop. Okay, so my idea was take a trade. I entered basically once I saw the SFP here, and I took some profits very fast at 0.5%. So at this point, I was already hitting my first level. Why here, you ask? Because look at this swing support resistance flip. Okay, that was like a very easy thing to see. So I took my first take profit here, and then I just left the trade to run. Let's see what happens. Go down, down, up. Okay. Again, super interesting. What happened here is that we went above this. So at this moment in time, I was no longer in my trade. Okay. And we had kind of the trade that we were expecting, but we did not hit this naked point of control. Again, once you see this kind of reaction, what I personally did, and Pierre, I think you did the same, if I'm not misunderstanding, is that exactly, you saw this, you see that there is a reaction. We're not going straight for it. You realize that this time we're taking those big major highs, okay, which are visible even if you're on the 2 hour, you go on the 4 hours, they're visible. You go on the, probably even on the daily, they would be visible. So those are like very, exactly, you see them right there. So those are very important highs to have in mind, and we took them out. What was the reaction? Let's see here. Boom. Okay, here you have to take profits, okay, for the simple reason of, look at this wick that happened right after it. You need to take profits on your trades because you never know whether or not there will be another liquidity hunt, especially when you know that you were expecting a hit of this naked point of control, because your full setup, I remind you what we said last week, was that we go above, we hit this, bam, bam, and we go down, okay? So far, we had only taken here those highs, but we hadn't hit this. So there was still the possibility to go take out the early shorts and then go down. Well, guess what? This is exactly what we did. So we took profits on this short, okay? Again, stop loss at entry. So any kind of loss here was at break even. And then you had the move, okay? So it's important to see that first move, we go down and then we go back up. Second time, you have another SFP, and the third time, this is when you can start entering the short with more confidence, because you know that you've taken out the liquidity, you've taken out all the early shorts, and this is the trade we were waiting for. We were prepared for this trade. So you enter. Where do you enter? Multiple places to enter. So initially I wanted to enter here because I had in mind like a swift move, but after seeing that we made a high here, and that you had the naked puck above, my then trading plan, so you have to adapt your trading plan, was to say, okay, if we take this high, if we have another SFP of this high here, I want to enter after we hit this level and we go down. exactly what happened. Okay, we hit this level right there. We went above it. We hit the naked point, and then right after we're down. So on the way down, you can take a very, very easy invalidation short where you have a 0.7, and if you're fast enough, it could even be a 0.6% stop loss. You can play with this, but basically you want your invalidation above the wick. And then you just see wherever this goes, okay? And you need to take profits, okay? And look at the reaction instantly after hitting this level. Look at what happened. Let me just remove some unnecessary. Okay, let's remove all that. We hit this, take out everybody out of their positions, and immediately after your enter, look at that, 2% trade, a 2% trade that was planned 2 weeks in advance. This naked point of control, we've been talking about it for 2 weeks now, and exactly this happened. You go here, take out everybody, so those shorts, you take out, and then you dump. Okay, and at this point of time, it really looks like there is a rejection on a higher time frame where you've been ranging down, and then you go back up, and then you hit this area of resistance, which is also, let me remind you, the fixed range that we have here, exactly that. So at this point in time, this was basically, we're at the value area high. Okay, so we're rejecting from multiple high time frames level, naked point of control, 618 retracement, value area high of the whole range, multiple swing failure patterns to make sure that everybody's out of the short before the big move. So here you're entering a trade that is, you're going to take profits on it, but also you have in mind that this could literally be a swing trade that you can take down at least to the value area low. You know, you expect like a rotation. First here, the point of control, and then why not the value? And this in itself could be like a 7% trade. Okay, so this trade was amazing in my point of view because we planned it, we traded it, and we took profits, and now we're in short positions waiting for lower. Okay.
Ned,
Yes, Dami.
do you want to show them the extension?
Ah, yes, you're right. You're right.
Just a
That's
bit of magic.
yeah. That's also the additional magical part. So this is another tool that you might have heard about. It's the Fibonacci extension. So you take basically a pivot low, you take the next pivot high, okay? You take the next pivot low, okay? Here I'm on the log scale. I remove that and look at this magic. This is the you see this line here, the 1-to-1 extension of this move. So basically what you like to do when you see like impulsive moves like that, you take the 1-to-1 extension of this move, you put it here, and then you see where it goes. And the target, it was pretty amazing, huh? When we saw it. Look at that. Look at that. I mean, I'm just zooming, huh?
To
It's
the exact sense.
it's not something that you can make up. 17,334 to the dollar. We touched it, and instantly we had, from this point, a 2.6% retracement. So technical analysis works, and you need to be aware of those
Yeah.
levels. Really important levels. So basically, all those confluences gave us like lots of confidence into taking this trade. Okay, so let's.
And even if you didn't get the extension part, that's what's cool about it. You can just go ahead and look at the market structure and look at the every week that it has been done, the
Exactly.
3 weeks before, and
Exactly.
just apply
Talking about
the
those.
knowledge. Like whenever the high gets taken, boom, you go into the short, and that's perfect.
Exactly. Because keep in mind something. What could have happened? Now, we were expecting this move, but what clearly could have happened was just we go here, we take the highs that are, and then we just dump. This could have happened, and we would not be surprised because we are at an area here, all this area here. You're looking for shorts. You're not longing here. You're looking for shorts because in this whole range, you're at the high of the range. So your first idea of a short entry could be the swing failure pattern of those highs. Okay, at this point of time, remember we had all those highs that were not taken out, right? All those highs were not taken out. So once you see this going down and liquidity above, you expect a move up. Now, where is this move up going to stop? We have an idea where we would love it to see, which is here. But it could have just taken out all those highs, not those here, but all those highs, okay, here. I'm talking about those highs here. And then just dump. It could have happened. This is why, in my opinion, there is the trade that you want to see happen, and there is a trade that the charts give you. And when you see a trade like this, you enter here. You enter here because this is even more confidence than this trade, keeping in mind that you can still go up. And when you see this final move and then down, I mean, if you don't take this trade, I don't know what you're doing, because you really, really, really need to enter. Okay? And this is what we did. Basically, that's what we did.
That
So
was a good one.
that was a very, very cool one. So let's see how price action went after that. Okay, so here, okay, interesting to see is that you're basically here changing market structure. Okay, so at this point in time, you're thinking, okay, we hit this level, we're rejecting changing market structure. For me, it can go lower. Let's see how it went. We took the highs, we put the low here, we take out the lows, we go up. So basically here at this point now, so here you're thinking this is going down. At this point now you're thinking, so it's not going
This
that
is a
fast.
range.
This is a range. Exactly. Once you see this, that you take low and then you take the highs and you make a higher low, you're no longer thinking this is going to dump super fast. You're thinking, probably there's a range that's going to be going on here. And with like pretty like, yeah, basically you just do that, right? This is what you're expecting. You're expecting this because this is what the market is showing you. Let's see what happens. Okay, and this is where we are now. Okay, and this is what we've been doing right now. So what's interesting to see also is that we created some liquidity here. We took the highs and we dropped from here. So let's focus on what we said. So last week we talked about this short setup. It activated. We already took some profits in it. This is a winning trade, whatever happens. Okay. In my opinion, I think we can go lower, but should the Bitcoin show some sign of strength and start going above this and reclaiming it and changing the market structure, we could expect another move up like that. This could happen. Now, would I be trading this swing failure pattern? Probably I would if I see the reaction, but I'm going to be taking profits pretty fast, because if this goes up here, takes the highs and drop, I mean, basically it just means that this whole uptrend is not invalidated anymore. We just, let's say we do this and this, okay, we don't know where the low is. For me, this is an uptrend. Low, high, higher low, higher high, higher low, higher high, potentially here a higher low somewhere, until we lose those levels. If we lose those levels, then maybe we start changing the market structure on a higher time frame. But so far, if this happens, I'm no really longer interested in taking a short here, thinking it's going to go down. I'm going to scalp a short here because probably there's a swing failure pattern reaction to expect. Take some profits pretty fast, maybe around here, 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 see where the VWAP is. VWAP usually gives like really, really nice. You see the VWAP is here. So this is how I would trade it. But the real thing I would be expecting is the next area that's untapped. Which one is it? It's this one right there. Okay, this daily level, completely untapped. There was no price action around it. And this is what we've been saying for, I think, 3 weeks now. Once we dumped here, we had this reaction here. We created this daily level. We had the daily level lower. And what we said with Pia is basically what we expect is this move. This. Okay? It didn't happen picture perfect, but it's basically what we're doing. Those are the lows. Those are the highs. Okay? We are going up and up and up and up. Potentially this could be the high of the whole move. And then you can expect like rotation to the downside. So next level to be aware of, and which I would keep like pretty close on my chart, would be this one. Okay. So what I advise now is to delete all that. Let's remove all that. Triangle pattern, that's played. Short position, that's done. Short setup, we know this short setup. Okay, I'm going to delete it now because I'm not going to delete it. I'm just going to hide it because we might need it for future sessions. I'm going to delete everything, weekly, daily, naked point of control, previous range. It's okay. Let's delete everything. Let's do it like from scratch, like we said we would. The long trade. Okay, so the trade setups, I'm going to keep them. but I'm just going to go from like, okay, there is no indicators, nothing on this chart, okay? And let's just redo the work without,
Ed,
yeah, tell me, Pierre.
could you minimize the object tree? It's taking too much spaces.
Like
Yeah,
that, it's better?
perfect.
Okay,
Yeah,
perfect.
yeah.
Yes, please do tell me if it's not clear enough what you're saying. Yeah, stop me like that,
No,
please. It's
it's
very clear.
perfect.
It's perfect. Thank you so much. So here we have our monthly level that was created actually a few days ago, right? When we started December. So this is a fresh monthly level, okay? To have on your chart. You have another one to the upside right there, okay? And then to the downside, this is what we had last week as well. We have this level, and then we had this level, okay? But let's focus on this part because, I mean, nothing happened for us to change the idea that we had of the lower sub 15K levels, okay? So we are not going to redo the full analysis that we did last week that covers the sub 15K levels because we're still up there. So this is still relevant. Exactly what we said last week. It's the same thing. But we are going to retake this from scratch because this is where we are now and we have fresh data. So let's do the exercise for educational purposes on this local area right there. Okay. I'm just putting those levels for as markers just to say, okay, to the low side, this is what we have. So monthly here, let's go to the weekly. Our weekly levels, this one did not change, the same as last time. Let's put it back on. Here, this is not hit exactly. Yeah, weekly level. We have a new weekly level now. Ah, no, my bad. This is not new. See this confluence here, pretty interesting. Here, this one was tapped, so we don't have any other weekly levels, okay? So let's just start putting some folders. That's monthly, weekly, basically our weekly routine. This is what we do all the time. And then just let's hide those. Let's go on a lower time frame, the daily time frame. And here you see a bit more locally what's happening. What are the daily levels that we want to have on our mind? So this one here, 22,000. So I suggest that we mark this daily level and we don't focus on higher for now. You have one here. Okay, so that's the daily level we were talking about earlier. We have this daily level that was created but tapped. Okay, so that's interesting. Look at the respect of this level. Create a daily level here. You arrive here to the highs of the range. Okay, this was when we hit the daily naked point of control, the trade setup that we took. Instantly you have a rejection. The next day you create a daily pivot here. You create a resistance here, showing you once again this is a resistance area. Okay, what happens next? You're below it. You touch it, rejection. You SFP the previous touch of it, rejection, and now we're below it. Okay, those levels are really, really, really cool. There is a daily level here, but as you can see, we traded through it, so let's not mark it. We have another daily level right there. I'm just gonna mark the levels that were not hit. Okay, basically what we do every week. Okay, so now we have a pretty nice view of the daily levels. What I really like is that those daily levels are framing the price action. So basically you really have to trade it like level to level here. Huh? We're fighting against this resistance right there. Should we start reclaiming this just with this information? Okay, we're ranging. Okay, we have those daily levels that have been forming around us. Okay, we are hitting this resistance. Should we start reclaiming this? You can either aim for this high or this daily level, and that's it. That's it. It shouldn't be more complicated than that in my mind. Pierre, you wanted to say something?
No, everything's perfect for me.
Okay, good. Sorry, I thought you had something in mind. Okay, so
No.
just with that already, let's put the weekly. No weekly here, monthly. Okay, so basically, locally in this area, the only horizontal levels that we have to play with, and which we should have on your, it's the daily, because the weekly, they're higher here, and the monthly is higher or below. So right now, monthly and weekly are not really helpful, to be honest, and you should focus on what's happening on the daily level. Okay, so what can we add to this? We can add to this some naked point of control. So let's start again with the higher time frame. Monthly. Okay, I should have done something else, but it's okay. Are we gonna see it? Okay, amazing. We're gonna see it. So here you have a monthly level right there that you can see, which is here. And where is it? 16537. 16537. Let's put it in. 16537. Interesting. Monthly. Okay. So we have a naked point of control right there. That's the monthly naked point of control. Interesting. What else do we have? Okay, I know there is no other monthly, but just because you guys maybe are not aware of that, let's just do the exercise on a higher data. I'm taking 101 days before, okay? Just to see what we have around us. So basically that's it, huh? Before this we were above, and then all the price action that we have below, we know that there's the same naked monthly puck at 15,300, 300-ish, 350 or something. So this is not changed, and we have another one higher now that's right there, okay? So, my bad, sorry. So let's keep in mind that we have those levels, okay? Now, let's go on the weekly. Do we have any new weekly levels? Sorry. Okay. Let's see what we have on the weekly time frame. We have nothing, okay? Everything has been hit. Everything has been hit on the higher side. We have nothing to play with locally. Okay, so no weekly levels. Let's go on the daily now. Let's wait. Just gonna wait a bit. Okay, so what do we have here? Nothing. Same thing, we have nothing showing up. What's interesting is that here on this template you can see that this level, was it this one? Yeah, this one. It was created on the 11th of November. Do you see it here? This level right there that we traded this week was created, 20 days ago. 24 days ago we had this level. And what this level showed you is that it was the exact top of this move. We hit it, instant reaction, and then you go under it. It's pretty crazy.
Yeah, another confluence for this level.
Yeah, but that was the daily naked puck basically that we had, huh?
Yep.
Remember? Yeah, that was
Yeah.
pretty cool to see. Okay, so we have those levels. We have our volume naked points of control. What do we usually do next? Let's go on the 4 hour. Okay, let's hide this. Let's call this, put it in a folder, naked point of control. But we just have one naked point of control. No, let's just add the other one as well, because we know there is another one below. Do you remember, Pierre, what was the level exactly? I don't want to cheat and go and check it myself in the other template.
15,375.
And 75. Thanks, mate. Okay. So those are basically the two naked point of controls that we have. Okay, and that's it. And then you have the daily levels, horizontal levels, and then you have the weekly. We have nothing, monthly, nothing. Okay, that's what we have to play with. So let's start doing some fixed range pool. Okay, the most obvious one that we have since the beginning is this one. Again, the value area high, very well respected.
Yeah.
Let's see, wick above, wick above, wick above. Not even wick above, wick on it. Wick on it. It's pretty crazy the respect of this level. Sorry, I have to zoom out. Okay, look at that. Look at this. This line that you see here, that's the value area high. Look at, like, wick, 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 super high wick, wick, wick. This is a very, very well respected level. So this is our local resistance. We need to break this if we want to go to this level and keep up with this uptrend. We need to make sure we reclaim this level. This level is key for now, and right now we're under it. Okay, so if you're under it, basically you lost the level, you created the level, you lost it. One could expect naturally like a rotation to the downside. Okay, now also keep in mind something, we're making higher lows, we're hitting the level. So first time, so let's say this is an area, you approach the highs, you have a low, You take out the highs, you have a higher low. You hit back this area but lower than this here, sorry, a higher low again. You go here, a higher. So you are basically like price action is concentrating between those levels, and at some point you can expect it to break out. Okay, there is some kind of a triangle pattern here. It's not perfect, but there is some kind of a triangle consolidation that you need to have in mind that's happening here, and it can either break to the upside or to the downside. Now we all know that here we do not want to take long trades, so the only trade you should have in mind here, in my opinion, and as a swing trade I'm talking about, not scalping, is a short. So is this a good short or not? Okay, right now where we are, I mean, for me the only short was here. Okay, we are still below it, took some profits around here. Should we go above it, get stopped out of the short, and see the reaction above this level? Should we swing failure this level? You have another short opportunity. Should we not swing failure this level and keep on going up, see the reaction around this? Okay, this, I mean, keep it very simple, level to level, and see what happens. Now, to the upside, what do we have else in this local range? We have this high right there. Okay, let's pull some fibs. Should we, let's say we start breaking up. That's what we want to see. Let's say we start going up. Let's add some Fibonacci levels. So you have this Fibonacci right there. Quite in the middle of nowhere, I'm not gonna lie. Okay. Also another important thing, but we talked about it last week already. This daily level right there is this low here. Huh? Keep in mind this. So if we reclaim this, we come here, we're gonna start fighting with the lows of the previous range. Okay. Should you start reclaiming this, it's gonna start to look a bit bullish, and this whole price action here could be just a deviation from this higher range. So you could expect higher moves up. Okay. Does it mean that you should long here? Not in my book. I wouldn't long here. But there's this possibility that you should be aware of. Okay, so don't short just because you're at the highs of this range. This could be a deviation and then you go back up. So you need to have this in mind. What else do we have here? Is there some kind of, let's see, like if we do a fixed range pool of this mini range right there. Okay, that's interesting. That's pretty interesting. The volume here is right there. Is this the whole area volume? Yeah, okay. Okay, this is very cool. So actually the next level, should we reclaim this? And I haven't taken those highs into consideration, but there is something here pretty obvious that you have to see. It's this, yeah. Support resistance flip.
Yes, an R flip, yeah.
Yeah, you see it here. It happened. So this is showing you that this is a resistance level. So the way I see it, okay, is that you have some resistance above, some stronger than others, okay, but you could expect something in this fashion, basically, of a price action. Should we go up? Like you reclaim this, you go here, some resistance, you go above, reclaim this, come here, play around, lose it, and then you go back up. This could be the price action that you see. And each time, there is a reaction you can play with, but still you're going up. And this is a scenario that you should keep in mind, okay? But those are basically the levels that you should have in mind to the upside, okay? One that is super interesting that we just saw is this here, the point of control of the previous range, right? So you're talking about the range since June 14th, 6-month-old range. The point of control, the most volume of transaction happened at 19,137, more or less, okay? And this happens to be the exact 618 retracement of this whole impulsive move, okay? So here, there is something to play with.
Big area.
Big area to have in mind. Now, the counter argument to this is the swift move to the downside, okay? Because if we are under the bias that this is a deviation, then the most logical thing to happen next would be that you reclaim this range lows, okay, pretty fast, like that, and then you go to the range highs, right? And why not even higher? Why not like challenge those highs right there? And if this happens, I mean, why could this happen in my mind? Because this was a very swift move down. So you can expect a very swift move up. Maybe you won't even have a retest. So if you are seeing this happening, if you're seeing price going through here and then like that, don't short like that. Don't short here because we went down super fast. We did not create any kind of resistance area in terms of market structure. I'm talking, not in terms of volume. Volume, there is one right there. In terms of pure market structure, we did not create any kind of pivot. Okay, which also tells you that should you short this level, where do you put your stop loss? Your invalidation is here, right? So until you actually see some kind of market structure creating going down, where you can actually put your stop loss here, without seeing this, should you enter this trade here, you would have to put, like on the way up like that, you would have to put your stop loss here. If you don't see a reaction and you're entering the short here, your stop loss is here. And this, you're talking about a 12% stop loss. So, I mean, obviously, this is not a good trade in my opinion. So, for this trade, you need to see a reaction. So, in my opinion, wait for a reaction. Do not enter because it's a big area of confluences. It needs to show you a reaction, an area where you can have like a stop loss, a short stop loss, so that your invalidation is clear, and then you enter the trade after losing the level. That's the best way to enter the level. If you enter the level aggressively as we're hitting it, you are exposing yourself to a swift move up, and if you don't have a stop loss somewhere around here, you're gonna lose a big amount of money. Okay, and the problem is your invalidation here is very ugly. There is no invalidation. Like, we went down so fast, there is no market structure to help you out. Okay, good level, but wait for the reaction. The best level, in my opinion, is once you start showing those. Okay, and the best level, because also of the market structure, would be this area right there. This is crowded with really, really nice levels. And we forgot to add another one because I said it was too high, but look at that too. You also have a daily level right there. Okay, I know it because we did it last time. So this area right there is going to be very, very interesting. You're talking about the value area of the whole range, value area high. Talking about this pivot high of the market structure that you can see that is very, very visible. So let's say we reclaim this, we go here, that. I would love to see something like that. And short around here. Sorry. Short around here. For example, after losing the weekly. But here, this is a major, major area of resistance. You have a monthly level, you have a weekly level, you have a daily level, and the higher again, you have another weekly level and another daily level. So this is going to be very, very tough to break out. And you have a nice short opportunity. First short opportunity in my mind, the way I would take it, and then Pierre, I will let you comment on this, would be that.
Yeah, I would like a SFP, but most likely, yeah, this is going to be
This would
a
be
crowded area.
this would be super
So
crowded.
you would like to search for, yeah, close invalidation, basically.
So you see, if you include this price action, the value area goes higher. And I think you should include it because if we're here, this is the deviation, so the whole range is to be taken into account. And if this happens, it actually changes the short setup because this is interesting, okay? If this happens, I will be in a short here around this level, okay? Probably even gonna start laddering into it here.
Yeah,
Probably
I
gonna
was going to
start
say.
laddering here after seeing
Yeah.
this here and then you go down. You could expect it to hit the weekly, but again, you have to trade what the charts are telling you. And right now, if you do this and you go down here, here would be a nice short entry. You see what happens at the daily level around here. If you see that there is some kind of a back test, we're going back up, you do nothing. But if you see that we're taking and then we're losing this level, this could be another interesting area like to add on to your short because you would be basically like you would have done this, right? And at some point you have to have a rejection, and this you're talking about 23%. So people are going to be taking profits, and people really really look at market structure. So here, this is an area of take profits. Area of take profits from longs down here. What does it mean? Selling pressure. So entering a short here, probably a very good idea. Okay. Next short setup, and the best in my opinion after seeing this, would be this one. Would be this one. Okay. Because you're above the value area high, and this I like a lot. You're above the value area high. You went above this daily level. You challenge those highs. Ideally, I would love to see this. Challenge the highs, lose the highs, and then you drop from here. And here you can have a very nice rotation. You take out those highs. This would look very, very bearish on this time frame I'm talking, because you take out the highs, you confirm below the daily level, and then you start losing those levels. This could be a very, very, very nice swing short. Okay, you're talking about the 16% potential. So this would be my personal favorite, would be this one. This is a crowded area, like Pia said. We can reject from any of those levels, but if we're talking about the best trade setup that could logically happen next week or maybe in 2 weeks, because you're talking about 23%, for me it would be this short here. So to resume, here you have an area of resistance, wait for reaction. Here you have some levels, you want to see what happens on those levels, but honestly, the best short opportunity is right there. You took those highs, you're above the value area high, you hit the daily level, and then you drop. This could be amazing. Now, another piece of information that's interesting and that I think you should have is that if we're under the context that this is a deviation to the downside, one can safely assume that when you go back here, this is going to be very bullish. And you can expect that you actually do the same to the upside. That you actually some kind of have a deviation to the upside, okay? So this is why I'm expecting this daily to be hit, okay? I'm not going to talk to you about this level and this level because we're very, very far away from them. Have them marked.
Yeah.
They're important. Have them marked. But if we had to stay realistic towards where we can go and the levels we could trade, first of all, should we get here already, it's a nice rise. And it would change locally, at least for me, it would give me like a first kind of sign of strength that maybe we're not going down yet. Maybe we're going to have like, we're entering this range and we're going to have this for a longer time, okay? Should we arrive at this level here and claim it, okay? Right now, we are way lower. Right now, we're here, okay? Keep in mind, we're trading this area, but we are being prepared to what could happen should we skyrocket to the upside. First area of resistance here. I'm talking about this range, huh? I'm not talking about those levels. Here. Second area of resistance where I really, really would like to take a short here. And then you have, of course, the highs of the range, but I doubt that we'll have it in a week of price action. Could happen, but I doubt it. Okay? So let's put those shorts into folders. So the first one for me would be this one, but again, the stop loss is going to be dependent on the market structure. I'm not going to put it here because it's stupid. This is not the trade that I have in mind. If we're here, I don't want to be in this short anymore. So the stop loss is going to be somewhere around here. So let's put it here for now and say that here, what we expect is, sorry, give me a second. So you have here a short of the 618 and point of control of previous high time frame range. Okay. Stop loss to be set after seeing a rejection of the level. Let's write it down so that next time when we see this, you're not surprised when we see we entered it and we put it a stop loss here, because right now we don't know where we can put it, but next time we could have something interesting like that. So this is the short setup, this is the Fibonacci retracement, this is the value area, if I'm not, yeah, this is the one, so let's put it here. So short setup, what day are we? The 4th December. Pierre, tell me if you have the same opinion on this short or not. I mean, would you take it, and how would you deal with it?
I
It's
would,
interesting. Would be
but then
interesting.
again, I'm a scalp trader, so I would take everything basically.
Yeah, 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 exactly. This is what you need also to have in mind is that those trades that we're showing, that those levels are interesting for people that are, for example, swing trading or can only take like one or two trades maybe in the week. But you have multiple levels of areas of resistance and supports where you can play with, especially if you have all the time in the world to trade that. So that's the first short setup. The second
As we do.
as we do, because we like it. So the second one that I have in mind that I really, really want to mark out is this one. Preferably with the hit of this weekly level. Not gonna lie, that would be amazing. Okay. So why am I putting it that way? Because if we enter back into this range, you can expect a rotation to the value area high, the value area low, sorry, of the full range, which would be okay around here. So the trade setup would be looking like that. So that's one of them. Okay. So here what I really, really would love to see is this. That would be the trade. Very self-explanatory. So yeah, let's put it here. Short of the high time frame pivot SFP. And then the short of the value area high of the previous range. My bad. Let me put this back on. Which comes above all this, and there's this daily above, so that's the last short that you could have in mind. And keep in mind, you can make money on each and every single one of those shorts if you take profits. You need to pay yourself. Whenever you enter a short trade or a long trade, any kind of trade, pay yourself at sensitive levels. Keep in mind that you can be wrong, and if you're wrong, you want this trade not to turn into a losing trade. It's always the same reaction that we're expecting because this is the kind of trade that we like to take. Okay, the swing failure patterns are really strong, very easy TP1, and then you have like you're at the extreme of the levels. You're taking part in the market structure, the high time frame market structure pivots. So you're taking part really. You're getting involved not in this crowded area around here, or here. You're not taking part into those. You're taking part at the extreme of the levels. Those are the highest potential trades in terms of percentages and risk to reward, at least in my
And
experience.
probability, yeah.
Yeah. So yeah, this did I do anything about? No, I'm just going to show the reaction, but I mean it's pretty self-explanatory as well. Tap tap. No, we have that. Then we have the
Ned,
rebates.
you don't have the chat, don't you?
No, sorry, excuse me.
Don't worry, don't worry.
Do we have some
Everything's
kind of
fine.
discussions in the chat?
Yeah, we were talking, but basically
Oh,
you are saying what I was saying. So
okay, okay, okay. Sorry,
I was saying basically for the BTC to go to these levels,
uh-huh.
you could say that the ES is pumping too. Like since it's been correlated for so long now.
Mm.
Like if the BTC goes there, that means that the ES is pumping too.
Definitely,
You know.
definitely. And actually, this is
Yeah.
a good point. Let's go to the ES now. Okay, no, before the ES, because we talked about short setups, let's talk quickly about long setups because there are two setups I have in mind that are really, really,
Yeah.
really cool. So, short setup, value area high, previous range. Okay, let's call them like that and put them here. Okay, let's remove this one and then let's remove this one. Okay, and those are, and what is that? Sorry, SR flip. I can remove this. That's a daily level. Put it here. Let's close that. Okay, so to the upside, we're basically set. To to the downside, what do we have? Well, we have very, very interesting levels. Should we put this back on? And should we play with a bit of Fibonacci? So let's put our fixed range again from here to here. You see the first area of confluence that is super, super interesting for me is right there. Okay? Because here you could expect, let's say we're right about the fact that this here is a resistance and we're going to reject towards the low of the range, okay, locally. So we're no longer thinking we're going to go higher, we're going to go lower. The next big area of support is going to be the point of control of this whole range. Can you see the shape of it here right there? You see the volume profile? This here, this area of volume profile is very, very, very strong. Lots of volume around here. So this area in terms of volume already is strong. Now let's add a bit of Fibonacci because we like to do that. And there you have it, okay? For me, the first long setup would be along from this area because you have Fibonacci, you have the point of control of the whole range, which is also the point of control, the monthly naked puck, naked point of control, okay? So here for me is a very, very, very juicy area. Now, if we add something else, I think I remember, if you take like the fixed range of the higher uptrend, point of control is still here, okay, interesting. If you take, let's say, fixed range here, what do you have? Yeah, point of control is the same. Okay, and should you take the fixed range of this move up? Okay, you have the value that's above. Okay. So let's just say that this area, because of the confluences that you have here, you can expect a move. Okay, you can expect something to trade back up, maybe to the value area high, maybe to back test it again. Okay, so here it would look like this more or less. So you take a trade here. So the stop loss, you have to decide. Either you put it below those lows, could be a nice stop loss here. It would be a 1.4 stop loss, or again, as usual, you wait for the market structure. And keep in mind, it can take lots of time. It can go down like that, SFP like that, triple SFP like that, and then go back up, okay? So either you're safe and you put it below this because you think if it goes here, that's it, or you wait to see the market structure, and when you see some kind of a reaction and you feel, okay, this market structure is now, you can adjust your stop loss and say, my stop loss, I'm going to put it below here, okay, below this low here, and I want to trade this to upside here, okay? Again, take profits. A sensible area to take profit would be those lows here. Yeah, those lows right there might look like it's not a lot. You're talking about a 0.9% trade already, TP1. So big time, you should be taking profits at those areas. Okay, so first trade here. Is it the best? In my opinion, it's not. It's a good trade. You can expect a reaction, but it's not the best trade. The best trade for me, let me just put this. So let's call it long setup from local 618 / naked monthly point of control. That's the big confluence that we have. Naked and point of control of the whole range. Point of control. Okay. So you can expect a reaction from here, but it's maybe not the best one. What do you think, Pierre? Is this an area for you that's interesting, or what's your opinion on that? Pierre, I think you're on mute. Can you still hear me, guys?
Yeah. Sorry,
okay, no.
I really like to see the 6-6 hit on this one, and make sure that the BTC goes down and then claim the level. Yeah, and then claim the level and go back up.
Something in this fashion.
Yeah.
So okay, yeah, interesting.
I would not take the long on the first stop of the puck for sure.
Yeah. So I'm putting the entry here because if you want to be like very conservative, you could expect this kind of price action and enter in the long after you see a reclaim of the naked monthly puck. Could be a good long. Now the best one would be, as Pierre say, maybe you put it here. You put your entry here, you see a reaction and you enter around here or even lower here. Okay. But I mean, keep in mind that this whole area here is going to be an interesting support area. So you decide depending on your risk management where you enter, where you feel it's the best entry. But this whole area here, For sure, there's going to be something. I do have to say that the point of control here, I mean, we could definitely see like a touch to the point of control and go back up. We've seen it. We've seen it in the past, and this could happen, okay? So let's say this breaks down, okay? So we're going down, we're hoping for a reaction here, we lose it, back test, and we go lower, okay? Where is the next area of support? Well, for me, there's one that is really, really cool. It's this one right there. This is a very nice area because you are at the lows of the range, okay? So you have the high from here, you have a short from here, you're taking it to the point of control. You're here, you fight with the point, you lose the point of control. The target of your short around here, where is it? It's at the value area low. And look at the confluences that you have at the value area. You have the 618 retracement of the full range untapped.
Horizontals.
You have a daily level untapped. You have the value area low of the whole range. And you have the series here of lows where you can be sure that everybody that's been longing here, 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 and even those guys have put their stop loss here or here. But some of them have put their stop loss here. Okay? So this is going to be a very, very, very nice setup. And I can tell you from now that should we start dropping? So this is a good setup, but you don't want to see this high taken. Okay? Why? Because if you see this high taken and you go above here, it's going to change one of the confluences of the previous trade, because then you cannot take this pivot and you have to take a higher pivot, okay? So depending where we stop, this is still a good one. But if let's say you stop here, what will happen? If you go here and you SFP this level,
I like this one.
Exactly. So you see how you have to always adapt your technical tools, because then should we see first a rise up and then a drop, this is still very interesting because you're still at the lows. But this one now is really, really stronger because you have the 618 that lots of people are going to trade in addition to everything that we said before. So the key thing here is to see where is going to be the pivot high, okay? And how do you know that? Well, it's going to depend on the price action. So if you start rejecting from here, this is the pivot high, this is your area of support. Should we start reclaiming those levels and go back up, this is no longer a valid pivot. You cannot have this tool on, and you need to adjust your thing, and this then becomes more interesting. That's actually cool to see it live. It's an interesting thing to take away. Okay, so let's just put this short as well, this long setup as well, and I think we'll be good, and we can go very quickly on
ES.
Yeah, on the ES. So I said here that I would love to see those lows taken out. So let's see that. And I would trade it at least towards the value area high as well. Okay, so that would be the best one. Long tack. Let's take this as well. And this would be a long setup. Daily value area low 618. That's so nice to see. When you see all this, this is happiness. This here, that's a happiness pocket here. You want to trade that. You want to trade that. Okay, so let's close this. Just before we move, should we lose those levels? The next long setup is the same one we've been waiting for a long time now. Why does it keep on disappearing? It's this one here. Okay. Should we lose those lows, the next level I would be looking to trade would be this one. But this is the same one.
Hopefully this time touching the naked monthly point of control.
Honestly, if we come here, we take this and we don't touch this, I mean, I would be really, really, really surprised.
I'm gonna be mad.
I would be angry and surprised at the same time. But this is our setup from last session. Okay, now we have it. Okay, good. Okay, good. So we have our long setups. Okay, we have our short setups. They're right there. Let's put them again just to see them for the last time. First long setup here. Second long setup here. Third long setup here. Okay. Putting them all so that you can see them. If you want to take a screenshot or anything, you can. Okay. To the upside, what do we have? And this is how you do a trading plan, basically. Short setup. No, not this one. Okay, this is like super high. Yeah. So this short setup, oh no, this is the one that we took. The next short setup that we said, yeah, it's the S. Ah, we didn't mark this the local short setup, did we? No, they're higher.
The one from the daily
Yeah, from the daily and from the SFP,
and
because
the
they're not.
SFP. Yeah.
Nah, they're not the most amazing ones. So okay, let me just put them very fast. There is this one that I would be looking at. Okay, I would be looking at this because it's the extreme of the range. So I could really see something like this. Okay, this is the reason why I would take this one as an interesting one. So that's more of a scalp thing because you don't know whether you're gonna go higher or not. Okay, but this is like a long of the top daily of the range.
Short.
Short, my bad. Sorry, short. You're right. If I'm
Also, there's not a lot of confluence on the daily. Like
uh,
there is just the daily, like
exactly,
nothing
exactly,
much more.
which is really why
So that's not the best short,
it's not.
to be honest.
It's not at
Mm.
all, and this should be a short with a very quick
Take
take
profits. Yeah,
profit. Obligé.
yeah.
You have to. Okay. So let's close this.
The SFP I would like though.
The SFE of this area here.
No. The SFP of the
This one
at
here.
18. Yeah.
You're right. This could definitely happen, and this is like the high of the. Oh, Jesus Christ. This is the high of the range, and actually, it would be interesting to just like have this pull. We haven't done it yet, but I mean, yeah, could see something like that, huh?
I have done it.
You've done it, and you don't tell me. You don't tell me to do it wrong. But look at this channel because actually, yeah, when we're saying we're in a range, this is what I have in my mind. But I'm sorry, I haven't put it on the chart. But basically, this is the low. This could be the high. Here we're at resistance, but that's like the extreme high of the range that we're thinking that we could go to. So definitely Pierre is right. This area as well is interesting because of this high right there. Okay, and if I'm not misunderstanding, sorry, my bad. There's also this right there, isn't it? Isn't it like a zero point 0.5 or something? I think there is, yeah. So
This is the point five. Also, if you do a fib pull from the low to the highs of this range, and you do a fib to 0.25,
from
you can
here
do
to
this.
here.
Yeah.
Okay, so let me just remove all that. So you want me
It's
to
good. You will see.
from here to here.
Yeah, 0.25.
Uh-huh. Oh, let me just do it from the other
So
side.
so yeah.
Reverse. Yeah.
So if you see the point 0.5 was the top on the 24.
Yeah.
Yeah. The 0.25 was the low on the 29.
Uh-huh.
And now we are battling against the point 0.5.
With a back test of the 0.5. This middle is very
Yeah.
well respected. Very well respected. So actually, yeah,
See?
you could expect here something nice. Yeah, definitely. That's definitely interesting. Can we add like our next levels? Okay. So this daily actually has another confluence, which was the 7.5.
Not that close though, but yes, this is
Not
a
that
region.
close, but I mean, this is the area where you're really happy to take a short,
Yeah.
and the daily is in it. Does make you think. Does make you think that you could see a reaction. So yeah, we do have to see what happens next, but Pierre is absolutely 100% right. This is very well respected. The midline, I mean, look at the midline. Look at this resistance. As soon as you go above it, support. This is such a nice level. Such a nice level to see it that way. Okay, this is
Even
very cool.
the 0.25 has created
Yeah,
horizontals like the daily.
the
Yeah.
daily level. Indeed, it has. It has. It's interesting to have all this mapped out because this gives you a plan basically. It gives you a plan. Here,
Yeah.
you look for shorts. Those are your levels. Okay, we already took some. Should you get stopped out, you know where to look for your next short. Okay, you can go as high as this level, and then above it, we mark them out. They're here. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100%. 100 You have this one right there. You have this short setup here. You have the short, the first short of the daily, which the more I see it, the less I'm fond of it, but really this one is really cool. Okay, so here, here, here. Yeah, let me just put them on so you guys can see them. I'm just going to remove the brushes because it's ugly. Basically those are the short setups. And also it's important to see, like, you need to have like the target in mind. So for example, if I take the short here, I'm expecting a rejection, it's to go back into this range. Now, should I get acceptance here and take a short in this area, I'm not expecting a full rejection to the lows. It could go there, but I'm expecting a rejection to the value area low of this range, right? So the whole short idea, the whole short target is different whether you're here or here. And this is like the context. You need to build the context for yourself to understand what's happening.
Yeah.
Should we move to the S&P
Yes.
futures? Yeah, and then we wrap
Yep.
it up. Okay.
Yeah.
So let's go to the S&P futures. So what did we have last week? We had, I'm not going to do the same exercise as last time, but basically this is what we mapped. This is an area of resistance. Look at this. We're battling against it. And we had already some nice rejections. So the first touch of this area, boom, you had a 3%. You're talking about a multi-trillion-dollar asset thing. Here you have 2.5%.
Yeah, that's amazing.
And then again and again, look, you go above it, like this weekly level right there, you go just above it, and then how much? Again, another 2%. So this is an area of resistance. However, as usual, higher lows, high. We are breaking above it. So let's see tonight when this opens where we're going to open. Should we open above it and start like grappling above? That's it. This area of resistance is no longer resistance, and actually it's becoming a support now.
Yeah.
So that's interesting to see. Okay, now should we open and start to go lower? You know where where's the next level? This hasn't changed. You have this big area of support right there, and maybe let's try to pull some fib around here. Oh my god, that's ugly. Why is this ugly like that? Ah, okay.
Reverse.
My bad.
Reverse.
That's the
Yeah.
reverse. That's the reverse. You're right. Okay, yeah, you're right. This is also nice now, because we made a higher high. Fibonacci retracement comes above this weekly, so actually you would have also that area of support that's being created. Should you reject now, you have this area of support now to keep in mind as well. So two areas of support, this one and this one, the way I look at it.
I like the middle one. Yeah.
The middle one is nice because basically it doesn't invalidate the uptrend. However,
Yeah.
keep in mind something. We are going down, okay? Nothing has changed. We're going down. Let me just remove all those things. I'm gonna keep that, okay. So, two scenarios. We go up, next resistance, always the same thing. This area, very big in my opinion. Very big. You have this high here, Fibonacci retracement, weekly level. You have everything you want here, okay? I removed the fixed range pool, but let's add it back on. And the value area high. Yeah, this is really interesting. This is going to be like the key level to beat. Because keep in mind something, should we beat this level, it's going to mean that basically we're changing the market structure of the S&P on a high time frame level. Right now we're not. Right now we're doing this. Yeah? We haven't taken this high yet. Should we do this, reclaim, and break this high, you change the market structure. And at least what you can expect is what we said last week, if I remember correctly. At least a range forming here, but you can at least say that this now is a low, okay? Whereas right now, you have no idea if this is a low. You had a nice bounce, but you also had it previously, right? You had previous bounce before, and then you dump again. So until you break above this area right there, for me, the S&P is still heading lower. You need to break this level. This is like the So the key level, in my opinion, if you had like to put one key level in mind, it would be this one. As easy as that. I would just do it like that. Key level, this. For me, that's like the key level that you want to see reclaimed.
Yeah, and if you claim this one, you could expect all-time high, basically.
Yeah. Because if you claim this one, I mean, I don't know about all-time high, Pierre. What I know is that you can expect at least a rotation towards the high. You can expect to
Yeah,
challenge the all-time high, but does it mean that you're gonna go to like here? We don't know. Nobody knows. Nobody knows. But you change
it could
locally.
reverse, sure, but
Exactly.
if it goes above and claim the level, I wouldn't be surprised.
Locally, we take this level. This means that this can go higher towards this
Yeah,
area. And then this will be the big resistance. And then what we'll be doing? This. We'll be doing this basically.
yeah, we could range.
Big area to range because we are in a major bull market. So I mean, if you go from before, I'm not talking now specifically, but if you like on Zoom, look at this. This is like a big bullish market. So if you start zooming in, it looks ugly, but remember that you're talking about the S&P, you're talking about the stock market. It's really strong. And so should we start reclaiming those levels? You could have a very nice range that can be traded or that can be used for your Bitcoin trades. And this is how we're going to do it. Okay? So
Yeah,
should we approach this level at the same time we're approaching a resistance level on the Bitcoin chart? Additional confluence. On the opposite side, should we approach this level when we're approaching Bitcoin on the support levels? So if you see this, you should start to think, S&P is at resistance, Bitcoin is at support. Should S&P drop, Bitcoin most likely is going to drop as well. So this is how you get confluences from those levels. Okay? But basically that's it. That's what I see here. Do we have new levels? I haven't seen. Should we have new levels here? Sorry. And then that's it. And then we wrap it up. Maybe we have some questions. I don't know if you haven't checked.
John was saying some question, but I answered all of them basically.
You answered enough. Okay, very good. Let me just see something. Okay. So basically, sorry, this is very ugly what I'm doing. Yeah, we already have it. Okay, we already have it. So no need to put this in. No new levels for now. In a weekly perspective, we're just going up. Okay, those levels were already marked before. In terms of the daily level, we have a new daily right there. Okay, could be interesting to mark it though. Let's put this one at least. Let's see what happens at this daily level. Not expecting much. Monthly, we do have a new monthly level. No, actually no, it was marked already before. Okay, well that's it then. That's it. Key
That's it.
takeaways. Key takeaways. We said it before. 4 or 3 short setups, 2 long setups on Bitcoin. Let's just see how it goes next week. But so far, we've been right on many trades. I don't know what you think, yeah, but
Yeah,
it's looking pretty good, huh?
yeah.
We've been trading this like really well. So let's see what the week ahead has for us. Yeah, those setups are crazy. Thank you very much, everyone, and bye bye.
Bye bye, everyone.